So I'm going to throw you into the deep end. I'm going to get you learning straight away about the terminology and lingo used in cryptocurrency. If you go on forums or on Twitter, you will typically see there are key words used to describe what's happening in the market. And I want you to understand what they are. So first things first, market. What does the market mean? Well, market typically refers to the cryptocurrency market. So by that, it is Bitcoin and every other coin. Every other coin than Bitcoin is known as altcoins or alternative coins. Bullish typically means that the price is on an uptrend. It typically means that people are buying. Okay? So if you think about bulls and how they attack, this will allow you to remember what bullish means. Okay? So bulls, they have horns and they the volume profile. Essentially, with the volume profile, what you can do is you can see where the resistance is coming from in terms of the volume being spent on that cryptocurrency. Okay, so right here you can see there is high resistance here. In order to break through and for the price to go up of Bitcoin, it has to break through this big resistance. So as you can see here, it met this resistance and the price went down. So that is another area where resistance can be measured. So essentially it's the ceiling. Once it breaks through the ceiling, then there's chances of the price skyrocketing. Then you've got support. This is normally the floor. This is a trend line that you draw along the bottom of the price movement. Okay, so you will draw it here. So it typically has to have 3 points of reference. You need to have it hitting 3 times in order to form a floor. So as you can see here, it goes up a certain amount and then it goes down, but there is a floor. Once it hits that floor, it goes up. So once it bounces off, bounces off, bounces off, that is the floor. That is what is known as support. So this is the volume supporting the price from going down. Okay, if it breaks down from the support, then the price could plummet. So opposite to resistance, if it breaks below or breaks down, then it will essentially fall. The price will fall. So this is another indicator. So that is resistance and support. Then you have volume. So I'm just going to put a volume indicator on this chart here. This will show you the levels of money being pumped into the asset. Okay, so in this case, the asset is Bitcoin. So as you can see, it can sometimes be low and it can be very high. Now, if it's green and it's very high, that means there's high buying volume. If it's red and it's very high, it means there's high selling volume. Okay, so as you can see here, it happened with this. The price had skyrocketed to 9,800 for Bitcoin. And then you had a high amount of selling volume that brought the price right down to 9,600. Same here as well. So the price, again, was up around about 9,800. Then you had a high amount of selling volume, and that brought the price right down to 9,400. So it essentially wiped out $500 off the price of Bitcoin. So volume shows you the level of money that is going into or out of a cryptocurrency. Then you have volatility. Volatility refers to the temperamental nature of the price movement. Okay, so if you are looking at something that's very stable, it will be just a very stable line. It will hardly move. But something that is very volatile means it's price swinging dramatically. Okay, so as you can see here, the price of Bitcoin starts here around about $8,400, and then it swings, it goes volatile, it goes up, and then it goes down dramatically, up, and then down a bit, up, and then down dramatically. That is volatility. Okay, now typically volatility is a good thing. You can capitalize on volatility. Let's say, for instance, that you got in at this point right here, then you would have made some profits. If you had sold at this point right here, you would have taken some profits before the price tanked. So that is how you can use volatility, the violent swings in the price action, to actually benefit you and for you to actually take profits and capitalize on your profits. Patterns refers to the various shapes that you can identify in the price movement of a cryptocurrency. So there's going to be a few. The rising wedge, the descending wedge, the ascending triangle, the descending triangle, cup and handle. And these patterns are ways in which you can predict the future movement of the price. Then you have action words. Okay, so we've got rally. Rally is typically where there is buying volume. Okay, it's typically where the price rallies up quite dramatically. So this could be called a rally. This whole section here could be called a bullish rally, which is essentially where the price goes from 8,400 all the way to nearly $10,000. So that is a bull rally. That means that there's been a huge upswing in momentum. Then you've got uptrend. That's another way of describing money going into cryptocurrency and prices going up of cryptocurrency. So typically, if you look at a website called CoinMarketCap, then you will see certain coins have had a big uptrend. Okay, so Electronium, Flexacoin, 0x, Zilliqa, these have gone up dramatically over the course of a few days. It's typically a consensus where a series of buyers have decided they want to move the price up of a cryptocurrency. Then you've got consolidation. This is typically the sideways movement of a cryptocurrency. So let's assume the price is being suppressed within a tight margin. Okay, so let's just use this as an example. Okay, so over here you have got the resistance and support lines, keeping the cryptocurrency going quite sideways. So it's consolidating the price. It's making it stay relatively stable. Then you've got correction. Correction typically refers to the price going down of a cryptocurrency. A consensus where everybody decides to sell and you see a dramatic drop in the price, as you can see here, from 9,500 all the way down to 8,300. And another word for correction is sell-off. So as you can see, the price of Bitcoin hit a certain mark. So as you can see, it was about 10,000. That was decided as the ceiling. Now, because it failed to get near that 10,000 again, essentially there was a sell-off. People thought that there was a huge amount of selling pressure, and essentially the price succumbed to that pressure. Typically what happens in this kind of period is people have set what is called a stop loss. Now, a stop loss is the next thing I'm going to be talking about. So what happens is that when, let's say, for instance, you've bought let's say you bought Bitcoin let's say $8,900, right? You want to make profits on what you have bought, right? Now the price has gone up to $10,000. Now you have made $1,000 profit if you bought a whole Bitcoin. Now, to protect that, what you do is you set a stop loss. So you decide a point at which the exchange sells your cryptocurrency at a certain price. So let's say you've gone up to 10,000 and you're thinking, right, I want it to go higher than 10,000, but should it lose $200, let's say it goes down to 9,800, I want the exchange to sell my Bitcoin at that point. In which case, I have made an $800 profit, but it's better than losing all that profit. So you set a stop loss. And that's typically what causes a sell-off like this, is people have set stop losses. Let's say at 9,500, 9,400, 9,300. Once the price hits that mark, they sell off, and then it causes a huge candle going down. These are what these bars are. They are essentially candles. And again, I'm going to talk about that more with you later. So they have set stop losses. So that's essentially what a stop loss is. It's basically the point at which the trader says, right, sell my Bitcoin so I can make some profits. It's basically a security measure to stop people from making losses. Now, it's very difficult to stick to a stop loss, because sometimes when you set a stop loss, you think, okay, well, the stop loss could get triggered, but then the price will go up from that point and I'm asleep or I'm doing something because the exchange sells it. You're not selling it, the exchange is selling it. So what happens is you may wake up in the morning, it hit that stop loss, it went down below the price that you've set a stop loss, but then it skyrocketed and then you've missed out on profits. So people can be undisciplined when it comes to stop losses, but you've got to be very disciplined. You've got to accept that, right, as long as I make a bit of profit, that is good. Sometimes people's greed takes over, and then what happens is people lose their profits. So I hope this has given you a quite rounded explanation on the terminology used in cryptocurrency. Now we are going to be getting into the main nub of the course. So I'll see you in the next lecture.